Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now today we're here to talk about what happened post the election results, or probably a day or two before that also. So the markets went up dramatically, and then as soon as the election results came out, the markets tanked by over 6%. And that is what created panic among investors. So today we're here to discuss how to make sense of it, and if you're faced with a similar situation again, what to do in that circumstance. We have with us Dhirendra, who will help us understand, why this market swing happened and what can you do to steer clear of that. So Dhirendra, welcome.
Thank you.
First of all, what led to this massive swing in the market?
First and foremost, what happened on the exit poll day when everybody was trying to anticipate what the election result will be, that was extremely positive. So that is when the market got excited that, okay, this another 5 years of a business-friendly government and continuity, and markets like stability, markets like predictability, markets like things which are, business friendliness, a government which understands that how not to disrupt. And, if you look at what this government has done in the last 10 years, it's quite understandable. GST, tax rates coming down, democratization of the market, digital transaction, it's a revolutionary thing. And then the Jan Dhan account. So these are revolutionary things. And it has a far-reaching impact. And the way it has benefited the markets, the economy, I think it's very difficult to estimate what is the tangible benefit. What came in the exit poll was the optimism, or was driving the market to greater optimism. And then what came as the real result was a complete surprise, was a shock for the market. That is why we saw that big swing, market going up dramatically and market crumbling. It has been one of the biggest decline in a single day in many years now. And similar thing happened in 2004 as well. In fact, the earlier situation was even more severe. When the Vajpayee government fell, or it was widely anticipated that they are going to, be back in power, they did not, and that single day fall was 14%. And so this was not as severe. If I adjusted for the previous day's appreciation, this decline was virtually nullifying what happened, and it was a nominal loss. But nevertheless, it was a big fall. And given that we are going to have a coalition government where there will be some kind of noise happening, some kind of and in a country where the media itself is so noisy and the businesses are very sensitive to such noise or business policies, then these things can happen more often.
So are you suggesting this can happen again?
This can happen again. This can happen more often. Because so far, last 10 years, we have gotten used to everything being done with great secrecy. Big decisions being done or being taken without much of a fanfare. One day we had the abolition of the petroleum subsidy, and that was not even news. We have to see that how it shapes up. But definitely,
it might not happen with
it might not happen, but it can't even be ruled out. Now, at least there are few partners who have to run the government, and hopefully they'll act responsibly. They will act with great understanding and maturity. And investors need to be just more cautious about these things. They have to really understand how things work and how to behave, because most of the time it is not the government or the market. It is how you behave which will actually make your losses permanent or help you hold your appreciation or tide over such crisis.
All right. Now, with this backdrop, I would like you to, give a word of advice for new investors. Firstly, new investors, and we'll move on then.
Yeah. Any investor who came in the last 1 year, they have every reason to panic because they're not used to the market. But most importantly, if you have followed the basic rule that you are doing SIP, you are investing the money which you are unlikely to need for next 5 years, then you have to just shut your ear and eyes when such a thing happens, because it's very easy for me to say that ignore it, keep calm and carry on. It's very hard to actually do it. So I would still urge you to keep calm and carry on. It is a hard thing to do. It is not easy. And then the second thing which most new investors should also consider, a change which they should make in their portfolio. What has happened for any new investor is that investors chase performance when they start. They see what has done very well in the recent past, and then they start investing there, whether it be a banking fund, whether it be some exotic strategy or some such thing. Diversify. Diversification is the biggest insurance that a normal individual investor can have. So choose a fund. Your long-term money should be investing. Even if you're doing your SIP, don't start with a small cap fund. Don't start with a sector fund. Don't start with a thematic fund. Start with a multi-cap fund or a flexi-cap fund or a value fund or a tax-saving fund, because these are vehicles which will help you gain exposure to all segments of the market. That's one. There was another problem. One is that it was scary for investors. On the other hand, in our office, there were people who said that this is the day to invest. Should I do it now? It might be very tempting. But if you are onto a plan, stay the course. Staying the course and not getting tempted by either being tempted to get out of the market or get into the market or invest so much
wait a minute. Are you saying that you should not have invested on that particular day, or
yeah?
So you should not have.
You should not have, because this came as because what will you do if for another 4 days there was a perpetual.
This is for a new investor.
This is for a new investor. It takes time to get used to it. And it is very important to, solidify your own principles, your own rules. It's like, forming a good habit. And that is why you should not get tempted by these noise.
Okay. Now, moving on, what should an investor who's been there in the market for the past 2-3 years and has seen substantial gains, what should be his course of action?
Somebody who has been in the market for a couple of years, and last couple of years we have seen the resurgence of the emergence of new investors coming into mutual funds in large number, and also coming into the stock market directly in large number. I think this is a wake-up call for every investor who is investing in stock market and doing his F&O trades. That day was a day when a lot of people would have gone bankrupt. Because most stocks did hit the lower circuit. Because they hit the lower circuit, you would not have been able to sell off. And because of the decline in value, your transaction would have been wound up, or your trade would have been wound up. And that is a big loss. A lot of people think that doing a leverage trade, putting 1,000 rupee and actually riding the surge on a 10,000 rupee position is one aspect. The other is that when you ride a 10,000 rupee position with your 1,000 rupee investment, and that 10,000 rupee position becomes 9,000 rupees, your 1,000 rupee has become zero. So losing 100% is something which does not, that is something which does not cross people's mind. When, it's a very positive endeavor, investing in markets and thinking. So when you are doing a leverage trade, and those are the days when you get completely wiped out. And for all investors who have started their SIP account in the last 2-3 years, they will be sitting on profit. They should not do much. But I think this is also a wake-up call for all those people who got into the exotic funds, something which was doing exceptionally well, which did rise dramatically. Because you also need to follow the same rules which I was talking about a first-time investor or a relatively new investor. Diversify. Keep it simple. Don't get into anything which is which is exceptionally doing well in a short period of time. So, and keep calm.
Okay. Now moving on to the third set of investors who have been investing for a long time and who have a sizable amount invested in the market. What should be their course of action here on?
Oh, that is very crucial, because that is something where, you have something to lose. When you see that you have worked very hard, saved money, invested over a period of time, you have been disciplined, you have been coming to Value Research Online, listening to us and following it rigorously. I think, that is when, you have 20 lakh rupees, 50 lakh rupees, and it's a very crucial money. You can't imagine that, something dramatic happens. And then you see it slipping down by 10% in a day. That is very scary. And that is the occasion when that is the time when you actually need an asset allocation. You need to write it on a piece of paper. Whether you want your 1/4 money to be in fixed income, whether you want half of your money to be in fixed income, whether you want your money to be, 3/4, into fixed income, depending on the urgency, depending on the time frame. And only you can decide about it. No external advisor can tell you that this is the right allocation for you. And once you do that, make sure that you're doing it. The advantage for those investors, this will turn out to be an advantage, because if you are doing this allocation, then you will do the rebalancing. If you do the rebalancing, you will have the money to invest on such occasion when such wild moves happen. So you will be able to move your money from fixed income to equity and have it in mutual fund. And keep it simple. 1/4 into equity, 1/4 into fixed income, you decide, or half into equity, half into fixed income. Don't get into too much of mathematics. There isn't a scientific basis to this mathematics. The basis of this, this method is that markets will remain crazy. You will be able to benefit from such an opportunity. You will not lose your sleep when such things happen. And just in case you need a part of your money is sheltered from the market.
All right, then the message is loud and clear. Stay calm. If you're in the markets for the long haul, keep calm and carry on. You should not be really worried. Well, that's all we have for you in this episode. Keep watching the space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.